Hi guys, welcome to another video by Optionables. My name is Ayush and I am a trader. In this video, we'll discuss Nifty and Bank Nifty's overview for the next week, and we'll also discuss what we discussed last week and on how that we can learn on certain factors. So now we'll go to the screen recording where we'll analyze one by one Nifty and Bank Nifty, and along with that if some stock which has made a major move in the last week due to results or the price action which can help us, we'll also see that. Hi guys, welcome to the screen recording. So as we will start with Nifty, last video we had been very clear that Nifty on the day of HDFC results and after that has been falling, and once it closes below 21,400 it can show some sign of weakness, and then thereafter if there is a follow through then we can see some continuation in the fall. But one thing is very clear that after this fall on 23rd January, which was like Bank Nifty opened up 1% and then closed 2% down, and even Nifty had the same sort of reaction that last day it had been a red candle and next day it opened and full from the high of the previous candle, one candle selling we saw. So now for us to see, we have to judge the support and resistance from a confidence point. Confidence point meaning that go and see the history in terms of the pattern, and if you see some sort of, let's say, some support coming in, we can see that this line has been a support which is 21,000. Why 21,000? Because firstly 21,000 we saw initially there was 4-5 days of compression here, and then the breakout came, and this 20th December shakeout which was in small cap, mid cap and Bank Nifty also, from that day we saw one way up move and there was no follow through on the downside. And thirdly 21,000 has been a psychological level. Whenever like levels like 20,000, any odd thousand levels are there, they generally tend to break with gaps, or either if they are broken you will see a candle like this. So for us to judge or go bearish on the market, this 21,000 level has to be broken. Until and unless, we should stick to range bound market, and if we get an opportunity to go bullish, I will say we should not hesitate, because next week after we'll have the union budget, and if not, we may have a pre-budget rally from the Monday, because this week and whatever movement has come, generally before budget you see either there's a one kind of rally or one kind of fall, but this pattern or this candles which have been formed, they were due to the HDFC Bank results, then ICICI Bank results, and generally IT results were good, so we saw this candle, and then bank results were terrible, so we went down. So for the coming week, my analysis is that until and unless 21,000 is broken on the downside and upside, let's say this 21,750 is broken, so stick to range bound market, and if possible don't simply trade, because you can trade from 915 to 330. There will be spikes, there will be increase in wicks also, because next week after we have budget, so in whatever wicks level we are trading currently, the wicks can go up, and you might not simply make money if you are just dependent on theta decay. So you may have to do something called as credit spread or debit spread, and if you can filter out the direction well, you should go with something called long vol trades, because if the VIX is increasing and if your direction is right, you can make good money with debit spreads. So that is one analysis. So coming back to Bank Nifty again, as you can see that this was a runaway gap. So runaway gap, to explain you that, I'll just take an example. So this was a broader range which was happening in Bank Nifty. We saw election outcome and Bank Nifty broke all-time high, and then Bank Nifty headed higher. So this type of fall, whenever a range is broken on the upside or downside with a big gap, this gap was nearly 4% because of HDFC Bank going 9% down, and then you see the other day market doesn't generally gives a follow through. It what it does is after this breakdown it retests this level, and from that day we open 1% higher due to ICICI Bank result, because ICICI Bank on that particular day was 5% up. But in spite of that 1% gap up, it falls 2% down. So nearly from the high it fell 3%. So one thing is very clear, that Bank Nifty is the index which is also taking Nifty down with it, and the structure has been very weak. So currently what analysis we can follow is, until and unless 46,540 is broken on the upside, which is this, if let's say the market again re-enters into this broader range, do not take a very aggressive bullish position. But for us to go bearish also, we need some risk to reward, and currently the movement which has been like from 48,200 to 44,000, which is nearly 3.5 to 4k fall, has come one way. What we can see is till budget we can consolidate, and within intraday there will be a lot of spikes on call side, put side. If I have to explain you what these spikes are generally is the irrational movements, because if you see intraday charts of last few days, you can see that before this monthly expiry we saw gap down, then market went 2% up, then from there it fell 2%, and then again went 1% up. So for us to judge this particular whole day's movement, it literally moved 5% in a whole day. So this type of movements are not good for somebody who is either sitting on non-directional trades, or so on particularly those fronts we have to stick to 0 DTE, or if you are trading you have to stick to like level based and have hedges. If you are trading based on stop loss, your stop loss will be taken on either side. When in intraday the market will be going up or bank nifty will be going up, let's say from 44,500 to 45,500, 1000 point rally and then 1000 point fall. When it will go up, the puts won't decay, and when it will go up, the calls due to gamma effect will surge in matter of 2-3 times also, and when it coming down also, puts will surge. So the whole day you can see one thing, that irrespective of the market closing where it opened, but decay won't come, and it will come near to expiry or something with either delta movement or something. So your chances of getting hurt is very high. So on those days, if you're not very sure, simply avoid or take little position and trade. So that was our video for this week. If you like this video, like, share and subscribe to the channel. Thank you.